Dalmia Group is closely linked to the building of India, founded in 1939 by Jidayal Dalmia. Jidayal Dalmia put his heart and soul in everything he did. He did not build the cement plants alone but built people, society and solid characters through his dedication, passion and sheer hard work. Over the years the group has established itself as leader in cement, sugar and refractories with presence in 24 Indian states. With a group turnover of over 12,000 crore, an impressive growth of 24% CAGR in the last 16 years, and with 8,500 employees, the Dalmia Group is committed in adding values to its stakeholders and take pride in being a green company. With a larger goal in nation building, Dalmia Cement has aided construction of dams, stadiums, bridges, landing strips and infrastructure for metros. Let's discuss about the product portfolio of the company. Company offers a wide range of consumer cement variants through their three marquee brands, that is Dalmia Cement, Dalmia DSP and Konark Cement. And its international brands includes Infra Pro, Infra Green and Insta Pro. Moreover, company is the category leader in super specialty cement, which is used in airport tracks, nuclear power plant as well as in oil wells. Now we will discuss the shareholding pattern of the company. As on March 2023, in-company promoters are holding 55.86% of shareholding. Foreign portfolio investors, that are FPIs, are holding 12.87% of stakes. Further, mutual funds shareholding is consisting about to 6.65%, other institutions are holding 2.1% and public are holding nearly 22.6%. Let's discuss about the executive members. Mr. Yadu Hari Dalmia. Mr. Yadu Hari Dalmia is the non-executive director of the company. He has more than 46 years of experience in the cement industry and holds a BCom degree from Delhi University and a fellow member of the Institute of Chartered Accountants of India. Mr. Gautam Dalmia. Mr. Gautam Dalmia is the managing director of the company. He has more than 20 years of experience in cement and sugar industries. He holds a BS and MS degrees in electrical engineering from Columbia University. Mr. Puneet Yadu Dalmia. Mr. Puneet Yadu Dalmia is the MD and CEO of the company. He has been recognized as the Year Entrepreneur of the Year 2017 in manufacturing category and served as an advisory board member of IIM, Bangalore and YPO. Mr. Pradeep Kumar Khetan. Mr. Pradeep Kumar Khetan is the chairman and independent director of the company. He holds a Bachelor of Law degree from the University of Calcutta and is an attorney at law. Let's discuss about the manufacturing capacity of the company. Company has 14 manufacturing units in 10 states, serving customer across 22 states with approximately 35,000 dealers and sub-dealers, currently having a capacity of 41.1 metric ton per annum. To meet the surge in cement demand, infrastructure and housing, Dalmia Cement is expanding its pan-India production to touch 48.5 MT by 2024. Among other states, it is looking to increase investments in the state of Jharkhand. Let's compare the peer comparison of the cement company. Dalmia Bharat has the highest EBITDA per ton of 941 rupees, followed by Ultratech of 903 rupees. Ambuja, Shree Cement, Ultratech and Dalmia has the lowest debt to equity ratio. Ultratech has the highest cement production capacity in India of approximately 120 MTPA. If we look at the market share, Ultratech has the highest market share of 30.2%, followed by ACC, who got a market share of 9.6%, Shree Cement with 8.5%, Ambuja with 8.3% and Dalmia Bharat with 6.7%, while rest of the companies have a market share of 36.6%. Let's discuss the cost structure of the company. Raw material expenses account for 14.46%, while power and fuel costs stood at 27.17%. On the other hand, 5.69% of expenses were incurred as employee cost, while other expenses stood at 35.40%. In cement companies, power and fuel cost take a significant portion of the expenses. Company is focusing on renewable sources of energy and aim to double its current renewable energy by 2024. Now you will know the financial parameter of the company. Company revenue increased at a CAGR of 8.92%, while its profit after tax increased at a CAGR of 57.01%. Moreover, the company has been reducing its debt over the last 7 years. Management key points: company aimed to reduce its exposure to the southeast region and by 2024 also to be present in the western, mid and northern regions as well. Moreover, company wants to expand its current capacity of 41.1 metric ton per annum to 54 metric ton per annum by the end of FY24 and to 75 metric ton per annum by 2027, 110 to 130 metric ton per annum by 2031. Company is further divesting its non-core business and allocating capital to its core business. Company has renewable energy capacity of 166 megawatts and further aims to double the capacity to around 322 megawatts by FY24. Disinvestments: company has been divesting from its non-core business in 2022. Dalmia has sold 5.2% stake in IEX in FY22 and will be gradually divesting its balance 15% stake. It has also sold Hippo stores for 155 crore rupees and sold its entire stake of Dalmia Refractories. To become a pan-India player, company has signed an agreement for acquisition of the cement assets of JP Associates in relation to acquisition of cement capacity of 5.2 metric ton per annum, clinker grinding capacity of 3.3 metric ton per annum and also thermal power plants of aggregate capacity of 280 megawatts for an enterprise value of 3,230 crore rupees. Now we look at what are the growth drivers to the industry. Government has allocated $1.8 billion for creation of safe housing, clean drinking water, sanitation, increasing road and telecom connectivity, among other initiatives. Also allocated $9.8 billion to address urban housing shortages. However, growing housing sector typically accounts for 60 to 65% of India's cement consumption. And also continued large investments in road and infrastructure projects. Strength and weaknesses. Strengths: strong market position. With a track record of 7 decades, the Dalmia Bharat Group is the 4th largest cement player, by capacity, in India, with operational capacity of 37 metric ton per annum as on December 31, 2022. The group has outperformed the market, with revenue growing faster than overall cement demand over the past decade, resulting in gain in market share across key markets. Strong presence in fast-growing eastern market with entry into central region to aid absorption of new capacities. The group derives majority of its volumes from the east and northeast markets. The company is also entering central region where the markets are expected to see higher growth than pan-India markets over the medium term. Further, this should aid in better absorption of the incremental capacity in the regions. Weaknesses: susceptibility to risks related to volatility in input cost, realizations, and cyclicality in cement sector. Capacity addition in the cement industry tends to be sporadic because of the long gestation period for setting up a facility and large number of players adding capacities during the peak of a cycle. Further, this has led to unfavorable price cycles for the sector in the past. That's it for today. Thanks for watching. Hit like button, comment your queries and share it with other investors for their benefit. Subscribe our channel for latest stock research updates. Don't forget to press the bell icon.